All right, let's dive into today's market action because, wow, what a fascinating day. If you were glued to the charts, you definitely saw some big individual moves. I would look at Cognizant, CTSH, just took a nosedive, completely blowing up its bullish setup.
Yeah, that was pretty dramatic.
But then you also had these interesting technical patterns showing up on the wider market, specifically these gap windows popping up on the SPY and QQQ weekly charts.
Right, this caps.
And they're not just random spaces, are they? They often act like, well, like magnets, pulling price back eventually. We're going to get into why these moves matter, what they might be telling us about the bigger picture, so definitely stick around. Hey, if you find these daily chats helpful, do us a quick favor, hit that like button. Seriously, it doesn't cost you anything, but it helps us out a ton.
It really does.
And click subscribe so you don't miss these updates. You can always change your mind later if you want. Just unsubscribe. Simple as that.
Quick and easy.
Okay, before we really dig in, just the usual quick reminder. Nothing we talk about here is specific buying or selling advice.
No.
Okay. This is just general market commentary, some trading education. We're here to help you think through things.
Exactly. Education, not recommendations.
So today, the market kind of took a little breather, didn't it? A modest pullback pretty much across the board after that really strong run we've had since the April lows.
That's right. It felt pretty natural, really, after climbing so much. Today, June 20th, 2025, was just about consolidation. So the S&P 500, the SPY, it dipped about 0.54%. NASDAQ, QQQ, fell 0.44%. The Dow, DIA, eased off 0.26%. And even the small caps in the Russell 2000, the AWM, slid 0.21%.
So pretty much everything down a bit.
Yeah, a slight pullback. And with the economic calendar pretty light, it really felt like the technicals were in the driver's seat today.
Totally agree. And that brings us right back to those gap windows you mentioned, which are just, well, they're grabbing my attention right now.
They stand out, don't they?
Yeah. For anyone maybe not familiar, a gap window is basically that empty space on a chart, right?
Yeah.
Where price jumps up or down and no trades actually happened in between.
Exactly. A void.
We call them magnets. Can you expand on that a bit? Like, why do they tend to pull price back? What's the thinking there?
Yeah, it's a really interesting bit of market psychology, maybe even market mechanics. When that gap forms, it signals a really strong, sudden shift buyers overwhelming sellers, or vice versa, leaving that price zone untouched.
Right.
Historically, the market seems to view these gaps as unfinished business, like a vacuum that needs to be filled or at least revisited. It's almost like the market doesn't like those empty spaces.
Like tidying up the chart.
Sort of. So it creates this, gravitational pull.
Yeah.
And seeing them on the weekly charts for STY and QQQ, that's significant. Traders watch these closely because they can become future price targets or even support and resistance levels down the road.
Okay, so if these gaps really are magnets, then the big question for all of us watching is, what's next? Are we just going to chop around sideways for a bit before maybe trying for new highs? Or are we due for maybe a necessary pullback to actually go down and fill those gaps? Feels like we're kind of at a fork in the road here.
That's exactly the situation. Those gaps show potential paths. Today's little pullback could be an early sign, could just be a pause. We'll see. What's also interesting, though, is looking under the hood at the sectors. Energy, the XLE, actually bucked the trend today, jumped about 1%. It led everything.
Really? Energy up 1% on a down day.
Yeah, it could be a flight to, more traditional value areas or maybe just reacting to oil prices lately. But on the other side, communication services, XLC, was the big laggard, fell 0.6%.
Okay, so tech and growth may be taking a bit more heat.
Could be profit-taking after the run-up, maybe some caution about valuations creeping in there. It just shows, even when the main indices are kind of quiet, there's still a lot of churning going on underneath.
Yeah, absolutely. And speaking of churning, let's talk about those individual stocks again. Coinbase and Cognizant, CTSH. Coinbase just kept marching higher today.
It did. Strong move.
We actually flagged that bull flag breakout just yesterday, didn't we? That pattern suggesting more upside.
Yeah, pretty much textbook follow-through on that technical setup.
Yeah.
Very clean.
But then, you flip the coin and you get Cognizant, CTSH. Totally different story. It just cratered.
Yeah, tanked is the word. On huge volume, too. And it completely invalidated its own bull flag setup. So the pattern that looked like it might signal upside just completely failed.
Fell apart.
Right. Basically follow the NASDAQ down, but like way harder. And this is such a crucial trading point. It's not just about knowing when to get in and where, ideally down to the penny.
Right. The entry is sexy.
Exactly. But arguably more important is knowing when not to get in. Or maybe even more critically, when to recognize a setup has failed and you need to get out fast.
That is such a key difference maker, isn't it? Avoiding the big losses often matters more than catching every winner.
Exactly. It's
Yeah.
all about managing that risk. And look, that specific technique, recognizing those subtle signals like trend line breaks, that's something we really drill down on in our Grok Trade mentorship program.
Makes sense?
Our traders, for example, they're taught to spot that exact moment when the reason for the trade changes, which is why they likely wouldn't have gotten hurt by CTSH today.
That's a really powerful lesson baked into today's action. Hey, by the way, folks, as we're digging into this stuff, if you've got a stock you're watching closely or just a question about what's happening in the markets,
Yeah, let us know.
drop in the comments below. We do read them, and we might even feature it in an upcoming session.
Definitely.
Okay, shifting gears a bit, let's talk broader economy. It felt kind of quiet on the news front today, right?
Yeah, definitely light on major economic releases today.
Which, funny enough, almost makes these technical signals we're seeing even more important, doesn't it?
It really does. When there isn't fresh data hitting the wires, the market tends to trade more on, well, existing sentiment, technical levels, and pure price action.
Yeah, no big jobs report, no new inflation numbers today. Traders were basically left looking squarely at the price action itself.
That's it.
And those weekly chart patterns, like the gaps we discussed, the focus really shifts from the macro headlines to the micro movements on the chart.
Absolutely. It underscores why technical analysis can be so valuable, especially on days like this. When the fundamental news flow slows down, the charts themselves become the main story the market is telling.
Makes sense.
And speaking of charts telling stories, let's look at crypto and metals. Bitcoin slipped about 1% today.
Still kind of drifting.
Yeah, pretty much continuing that consolidation we noted yesterday. No real strong directional push yet, that 50-day moving average. Still the key level everyone's watching.
Okay.
A decisive break above or below that could really signal the next significant move for Bitcoin. But for now, it's just waiting.
Interesting. Bitcoin waiting.
Ah,
But gold, GLD, that held flat today, which feels pretty strong, actually.
it does, especially considering it's drifted just a little below those ascending triangle trend lines we've been tracking for weeks now.
Right. That pattern usually hints at an upside break.
Usually. And remember that death hook pattern we mentioned yesterday, the one that often signals weakness?
Yeah, it looked ominous.
But we didn't get a shark sell-off after it formed. Gold just kind of absorbed it.
Right.
That suggests there's real underlying strength there, even if it's not rocketing higher. Maybe safe haven buying? Hard to say for sure, but it's holding firm.
Okay, so gold's holding its ground. Silver, though, different story.
Yeah, silver, SLV, got hit harder today. Dropped about 1.65%. It's falling further away from that $33 support level we highlighted.
That divergence is interesting.
It is. Silver's weakness compared to gold might signal something about industrial demand softening or maybe just more speculative selling hitting silver, something to watch. And quickly on altcoins, still pretty mixed. Like, no big breakouts really screaming altcoin season yet. We're keeping an eye on Ethereum, though, for any signs of rotation there.
Gotcha. You know, days like today, where you see a setup like CTSH just completely fail so dramatically.
Yeah, brutal.
And then you look over the big indices, SPY, QQQ, and you see those gap windows just lurking below.
Yeah.
It really hammers home why having a solid trading plan, a framework, is just so critical.
Absolutely essential.
Knowing how to read these signals, maybe more importantly, knowing how to react or not react. That's everything. And this really leads into why the Grok Trade Mentorship program is, well, frankly, such a game changer for people trying to navigate this stuff.
That's exactly why we created it. It's about giving you the tools and the understanding to make confident, informed decisions, not just emotional reactions when the market gets volatile. We teach you how to read the market's language, understand when a setup is valid, and crucially, when it's not, so you protect your capital.
And the support aspect is key too, right?
Absolutely. We provide personalized risk management guidance, and we offer ongoing support structured to help you recoup your initial investment in the program. Yes, you heard that right. We stick with you. Our goal is to empower you to handle these markets with real clarity and confidence.
It's about learning to manage capital wisely.
Intelligently. Turning these market challenges like CTSH or those gap windows into learning opportunities, not portfolio disasters. We really encourage anyone serious about trading to check out the program.